Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday, the 18th of August, 2018, and we're providing our gold and silver weekly update for the week ending the 17th of August. Gold fell $27 last week from $1,211 to $1,184, having hit a high of $1,213 and a low of $1,161. In sterling terms, gold finished the week down £19 at £929, and in euros it closed at €1,035, down €26 on the week. Silver fell 51 cents, from $15.31 to $14.80, having hit a high of $15.35 and a low of $14.37. In sterling terms, it closed at £11.61. That's down 38 pence. And in euros, it closed at 12.94 euros. That's down 0.480 euros on the week. The gold to silver ratio rose from 79.1 to 1 to 80 to 1. Again, another consecutive increase. The Dow Jones closed on Friday at 25,669, up 110 points on the day and up 356 points on the week. And the NASDAQ closed at 7,816, up 10 points on the day, but down 23 points on the week. Brent crude fell 98 cents, from $72.81 to $71.83, and U.S. light crude fell $1.93, from $67.63 to $65.69. The dollar index stands at 96.10. That's down 0.25 on the week. Wow, did last week prove exciting. Gold practically fell almost from the beginning to its lowest level on Thursday at $1,161 and managed to recover a little ground late Thursday and on Friday. Trading opinion seems to reflect that a number of short positions were closed on Friday to avoid exposure moving into the weekend. Short term, as we have persistently remarked, it's all about the dollar. The dollar softened slightly towards the end of last week, thereby giving precious metals a slight impetus and a road to recovering a small amount of their losses. But let's not be sanguine about this. Anything that adds strength to the dollar will short-term be negative for gold and silver prices. Now, the old theory used to be, if there is a conflict in the world or a dispute, people would rush to gold as a safe haven. Generally, there is a lot of empirical evidence to support this. But with traders looking for gratification and the fear of currency devaluation, what happens initially is that traders move monies into the US dollar. Now that is an anathema to those who believe that the dollar is in immediate peril. They quote that the debt clock stands at $21.3 trillion and this is unsustainable. We have said for over 3 years that even $30 trillion is sustainable. But as we near that level, if we do, then nervousness certainly enters both bankers' and traders' psychology, if not physiology. At some stage, we shall provide a video supporting why we say this, but it will be somewhat technical, but we shall cover it in due time. We have also observed some of our subscribers reacting to the 2 videos we put out this week, asking us if we believe market manipulation occurs, and has this week not been an example of the US government punishing gold and silver deliberately? Our answer once again is that we do believe there have in the past been government interventions, mainly to preserve a stable market. There has been much more manipulation by traders and institutions attempting to make a quick buck. But this generally is short-lived. Last week's fall was more to do with the dollar's strength and the movement of monies out of emerging economies and their currencies, where there are genuine reasons for fear. President Trump's trade tariffs and threats of more adds to this uncertainty and fear. Even at these low levels, we wish to remind listeners that the majority of mines which extract gold and or silver are still operating with lower AICs, all-in costs, and so can still operate and function profitably. So we haven't reached that stage yet necessarily, where supply and the prospect of future supply is affected. On the positive front, and as we alluded in our last video, China may indeed be coming to the table to discuss tariffs, etc., with the US in September, which may ease some tension. But Turkey is certainly not out of the woods as yet. From a technical point of view, traders were taken aback by how easily gold fell below the $1,200 level, which had until now provided quite a resistive floor. And the general consensus is, and this is from a trading point of view, not a stacking point of view, that traders may use any rise near to $1,200 as an opportunity to short gold, which reveals currently their expectations in the short term. Silver again followed gold's path, and we are sorry for continuing to repeat this, but at the moment, gold is the leader and silver the follower. It sliced through the $15 level with ease, reaching its low at $14.35 on Thursday, recovering a little again Thursday afternoon and Friday. One trader commented, quote, "The $14 level underneath is massive support, but I cannot help but notice that we have formed a bit of a descending triangle that has broken. We could go below the $14 level. And if we do, I think that shows just how strong the US dollar would become. I am watching the level just below with great interest, as it could open up a nice buying opportunity, or could open up the floodgates for the sellers. The next couple of weeks will be crucial." Unquote. Frankly, we agree with him. Whereas we suspect silver may meander between $14.50 and $15 as the dollar softens, if there is any geopolitical news which may cause it to rise again, we could well see silver drop again towards $14 and possibly just below. We have stated this for quite a few months, but we are also of the opinion that silver trading in the $13 range is likely to attract a considerable number of buyers, but again short term, the US dollar rules. Our take on the recent price moves are revealed in the last two videos we produced, which you will find highlighted just below this video in the description section. So what is likely to affect prices this coming week? Well, Monday and Tuesday are pretty quiet periods as far as official reports are concerned. On Wednesday, we have the FOMC minutes supporting the Fed meeting on the 31st of July and 1st of August, and this should provide an insight into how close the next interest rate rise is likely to be. On Thursday, we have new home sales for July and flash market manufacturing and services PMI for August. And on Friday, durable goods orders and capital goods orders for July. For those actually interested in banking and what the Fed chairman has to say, will be delighted to know, okay, a touch of hyperbole here, that Federal Reserve Chairman Jerome Powell is scheduled to speak next Friday, August the 24th, at the annual Global Central Bank Conference in Jackson Hole, Wyoming. He will speak on monetary policy in a changing economy at the start of the two-day conference, according to the notice from the Fed. Fed chairs in the past have used speeches at the Kansas Fed-sponsored conference to signal future U.S. central bank policy moves. So what will happen to gold and silver prices this week? Frankly, we do not know, as it could go in either direction. There is the prospect for a small improvement, but international developments will have an impact on the dollar in either direction. What we do believe is that there may be a short period of gestation whereby the market gets used to sub 1200 gold and sub $15 silver for a few days or perhaps a week. And then we should see movement, in our opinion, downwards slightly once again. However, please take note that it was the Fed's intention to raise interest rates again in September. But if the dollar increases its strength from its current level, it will be difficult for the Fed to do that, and this may be the start of a gold and silver price recovery. We shall have a better picture once this coming week is over. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on Twitter. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe as a free member for regular email updates and offers. Disclaimer: Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.